Hey, this is Matt from InvestiQuant. Today is Tuesday, October 5, 2021. This morning, the markets gapped up and we have pushed higher and are consolidating up into highs in most of the instruments this afternoon. I've got the S&P up here in the top left chart. You can see we opened up a little bit higher, quick test lower, and then started trending to the upside. Our opens are down here near the low. Our current price is up near the high. We're actually above yesterday's high right now. That's the pattern that we're going to be looking at specifically this afternoon in Discover, is this type of gap up and then trend higher and above yesterday's high. Let me go ahead and set that up here in Discover. I'll grab all four instruments. Setup will be based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, this morning we opened higher, so I'm going to add that to the test by going to opening filters and clicking on gap up. Next, I'm going to go to the post-open filters, and I'm going to describe the intraday action. And the way that I'm going to do that is I'm going to say that the open is near the lows and the 3 p.m. price is near the highs. So I'm going to click on this equals next to open and bottom 25% of the intraday range. So that means the open is down there near the lows of the day. And then the 3 p.m. price, I'm going to assume that's still up where it's at right now in the upper end of the range. I'm going to hit equals next to close and top 25% of the intraday range. And then the last thing I'm going to add is that the closing price, which is referencing that 3 p.m. entry time, is above the prior day high of day. So to do that, I'm going to hit equals here next to above prior high. And then lastly, I'm going to put it in a similar market environment where we are below a 10, but above a 200-day simple moving average, and click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. When you gap up and take off to the upside and are trading above the prior session high of day at 3 p.m. This is taking place below a 10 and above a 200-day simple moving average. So the way I've described this, we've got 128 samples in the S&P dating back to 2003. The NASDAQ has 126. We've got 109 in the Dow, 111 in the Russell. The win rates on these are coming in a little bit weak. S&P coming in, just 40% of these have closed higher than that 3 p.m. price. The NASDAQ very similar at 41%, the Dow 42%, and Russell the only one that is more favored than the others, more favored than 50-50 at least at 53%. So 3 of the 4 are weak. If we look at the average moves, it looks like the average loss in the S&P is a little bit larger than the average win. They're pretty similar in size here for the NASDAQ. The average loss is larger than the average win for the Dow, and that's pretty similar in size here for the Russell. So 2 of the 4, a little bit larger average moves to the downside. The other 2 are pretty similar. And as a whole, the win rates are a little bit weak on this pattern. It looks like it's been a little bit weaker here recently. And if you look at the equity curves, you can see they've been straight down here for the past couple of years. If you look at the table here below, S&P, just the past 5 years, 41 samples, just under 30%. So the recent years have been weaker than the long-term look back. You can see down the equity curves as well, as they were flat here for a while and started moving lower. So this pattern, at least recently, has been quite weak going into the close. Maybe that means you want to tighten up your stops if you got long early. But just be aware that historically, this pattern has not fared all that well into the close, at least in recent memory. So hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.